Okay, it's 2 o'clock. Hello, everyone. Welcome to today's session. Today, we'll talk about how to actually set up and maintain your foreign assets in class, and also some commonly asked questions. So I will just start sharing my screen. All right. So it's just some housekeeping for today. We'll be taking questions during the webinar via the chat window. Therese from our implementation consulting team will be helping to answer any questions you may have during this session. We'll also send you out a summary of every question and our answers from the session. We'll publish a recording of this webinar on our class education page, and we'll send out a copy of the PowerPoint. So it will be uploaded into our class education page in the next couple of days. Finally, at the conclusion of this webinar, we would love if you could take a moment to just complete a short survey on your experience for today. Today's agenda, I have actually break down this particular session into the following topics. So foreign bank accounts, foreign listed securities, foreign corporate actions, foreign tax credits. Last but not least, foreign tax credits. So this session is suitable for junior to intermediate level of our class users. So come to the first one, part one, set up bank accounts. So before we actually get into the topic, I would like to do a poll question. So this poll question is, what is the percentage of the self-managed super funds holding foreign bank accounts in your practice? So I'll just give around 30 minutes. So, wow. Thirty seconds. Okay. Oh, still going. Cool. I think that's the end of the session. So I'll just share the actual results with you. So around 86% of you probably have less than 20% of the foreign bank accounts holding by self-managed super funds, 12% holding 20 to 50%, and there are 2% actually holding a bit more. All right. So stop sharing the results. Let's move on. So let's get started on the setting up bank accounts. Well, it's quite straightforward just from the class app. So if you actually, you just need to go into investments, click on bank account. So from the screen, there's a parameter called is foreign. So you select yes, and then the drop-down list for this currency will show up and you select the relevant currency. Also make sure that you do select the foreign cash treatments, foreign cash tax treatments. We'll actually discuss this a little bit more in the Forex realized gain slide for this. So most of the time for a take-home funds, you use the Excel fund loader. So when you use Excel fund loader, I'll show you how it looks like in the Excel fund loader. So make sure that in the cash tab, entering the foreign closing balance. So this is normally in the foreign currency, and then also put in the book cost. This book cost is generally in Australian dollars. And then you also select the relevant currency with it. There is another, so this is actually not a compulsory fields. There is a compulsory fields just in the opening balance. So from the opening balance, if we're going down to the bank account balances, entering this particular value, this bank account balance into this field. So normally this value is the 30th of June retranslated balance. You can actually find this balance from the prior statement of financial position. So what actually can go wrong here? So sometimes if you're actually missing some information into the Excel fund loader, what actually happens is these particular foreign accounts will show more like a local bank account just on the load opening balance. You generally won't see any issues until you run a peer update, and the peer update will actually say there's insufficient insufficient holding for these bank accounts. We actually have quite a lot of support queries on this issue. So we wrote a knowledge-based article on this particular topic. We provide this knowledge-based article only just providing you a workaround. This workaround requires you actually to create a new foreign bank account, move all the transactions into the foreign bank account, and then fixing the foreign bank account from the load opening balance page. So back to our slides. What's going on? Here it is. Sorry. So back to our slide. There is also another commonly made mistakes from the load opening balance page. A lot of the times that what we find is the quantity and also the book cost has been entered with the same value. So this quantity normally stands for the actual foreign currency in the foreign currency value. And this is normally, the book cost normally stands for the Australian dollars. So because it's foreign exchange, so you rarely actually have these two amounts the same. So once you enter in here, you normally won't really discover this particular issue until you actually run a lot of peer updates and probably already, closing couple of financial years. And then when you run the next peer update, you receive this error message and say there's insufficient holdings for this particular foreign bank accounts, but it's not reasonable to go all the way back to the beginning to the load opening balance and then to fix it. So if you do have situations like this, unfortunately in this case you need to actually raise a support request. Just make sure that you mention this is the situation. So we will actually escalate this issue to our development team so they will fix this. But again, so this for sure will delay your normal workflow. So it's like a highlights from us. Make sure that you're entering your foreign bank accounts correctly at the beginning and then start processing the funds. I've put in the user guide in here. So how to update the opening balance for foreign bank accounts on the load opening balance page. So make sure if you have time, just have a look at this. So talking about foreign bank accounts, another essential factor is definitely the exchange rates. So where will class actually receive that exchange rates? I'm already showing this page, great. So we have actually two types of exchange rates. One is the spot exchange rate. We get it from Morningstar and SIX Financial Information. And the other one is the official exchange rate, which of course we get it from Reserve Bank of Australia. Currently, we support 21 different exchange rates in class. So, sorry guys. Currently, we receive 21 different foreign exchange rates. For sure, we're going to support more. Just make sure that you keep an eye on our monthly release notes. We send it out normally by emails monthly. There is another commonly asked questions. The exchange rate sometimes it is actually different from your broker statements. And if you want to use, the exchange rates on your broker statements, what can I do? Well, the bad news is you can't really change the exchange rates because when it was built into the system, it's not really designed to be editable, but you can actually change the actual amounts for that cash transaction to reflect what's on the broker statement. I will show you how to do this. So I hope you can see my screen. So if we're going to update the cash transaction, what you can do is go into transactions, browse bank statements, pretending I'm adding in the new transaction on the 1st of October 2018 with 10,000 Japanese yen. And then on this particular date, I've got the exchange rates as 0.0122%. And my equivalent Australian dollars is only 122. But on my broker statement, it's probably showing 130. Then what I need to do is updating the Australian equivalent amount. And once I click on tab, on my keyboard, you've noticed that these particular exchange rates has been updated. So this exchange updates only applies to this particular transaction. So no need to worry that it will change the other transactions. So you may also question that as of 30th of June, if I need to retranslate my bank account, how can I make sure that I can use the correct exchange rates? So what you can do is go into investments, browse holding accounts, and then if you do not like the exchange rates as at this particular date, and then you believe it should be something different, what you can do is click on this menu button, and then click on holding price / valuation. And you only just need to click on new and to add in the new closing balance or the exchange rate. So in here, price stands for the actual exchange rates, and the valuation stands for the actual balance of this as of 30th of June. So update it from here. You see, we'll go a bit further later once we going along with this session. So this is how you update the page. Oh, trying to get back to this screen. All right, this is how you update your exchange rates. Another question we normally have is with data fees, like which particular financial institution do you support the data fees? If we go into this page. So currently, unfortunately, all these banks, we don't really receive foreign cash transactions from bank accounts due to the technical difficulty with it. But we do actually receive foreign trading data from some platform data fees that are also brokers. So they do send us some foreign trade data. So this data generally stands normally just the buy and sell, the acquisition and disposal events, and will create these particular business events in class. So going back to the slides. Sorry, guys. Here we go. So going back to our slides, next, I'm going to explain the Forex gains or losses. So there are two types of Forex gains and losses in class. One is the Forex unrealized gains. The other one is Forex realized gains. So for sure, like 30th of June, normally all the investments should be revalued for self-managed super funds to a market value, but the foreign bank accounts revaluation is actually according to the IAS 21, paragraph 8, because the cash account is actually a monetary item. It should be retranslated as a 30th of June, which is the end of the financial year. So I've included journal entries here on the slides. Both ways, I will demonstrate this. So both of these journal entries, or one of these journal entries, will be taken up once you run the period updates. So class will do this for you based on the exchange rates or based on the actual valuation you inputted into the system, into class. So here I've also linked another knowledge-based article. So what we actually found out is, especially clients taken on from another software, they may actually maintaining this foreign unrealized gain or losses as a separate account, and then keep the original foreign cash accounts book cost, in another account. So how to actually deal with this particular situation? So this particular, what did I do? Here it is. Sorry guys, just making sure that I'm still sharing my screen. Okay, so how do I do if we have this situation? So we do have actually give you two options. One is to, just use class to do the end of the financial year Forex realized gain and loss, to take this up, use us to do the calculation and the journal entry. If this is the case, we will need to actually ask you to combine this custom holding account with the foreign bank account. So you only just keep one foreign bank account. So the good news is class does keep all the original purchase cost of the cash in transactions. So you don't really need to worry if you do have any Forex realized gain or losses you need to take up. Class will still taking up the correct balances. So the other way to do this is, of course, still keeping them separate. In this way, just making sure that you at the year end, you manually calculate the Forex unrealized gain or losses, and then you can journal them into class. So take one side is to adjust the balance for the customer holding account, either cash in or cash out, and the other side is taking up a foreign income or a foreign expense to take up the Forex unrealized gain. So back to our slide. I think it's here we go. The next one is the Forex realized gains. So why do we actually have Forex realized gains? So this is, of course, another IAS 21. So how do class calculate the realized gain and loss? So to calculate this, the original Australian dollars is normally go with the cash in transaction. So this will actually be treated as the cost of that particular foreign currency. And then if you actually normally realize gain or loss will show up on the operating statements after the period update if you do have any cash out transaction from your foreign bank account. And then again, this equivalent Australian dollars to the cash out transaction will be treated like a proceeds. And then the difference between these two will be taken up as the realized gain or losses. For accounting, if not most of the cases, there will be multiple cash in and cash out transactions. So for accounting purpose, we use first in, first out method to calculate the realized gain and loss. But for tax, we do have 3 different options. Sorry, just wondering if you can see my screen. So here is the user guide pages that we introduced the 3 methods. One is the $250,000 different balance exemption. Another one is the retranslation election, and the other one is, of course, first in, first out method. So either way, so have a read of these user guides later if when you get a chance. So this page will actually introduce you the treatment and also the formula of how we do the calculation. But if you have more questions or maybe need a little bit more clarification, please refer to the ATO website. They have really detailed explanation on 3 methods. So next, what I will do is I will show you after running period updates what will happen in the system. Okay, so I'll show you the unrealized gain losses first. So still using this Japanese account as an like an example. So in here I have this Forex unrealized gain of $850. So what's showing on the statement of financial position? So remember that I've entered this particular amount, 1,500, into the holding price / valuation, that area. So this is the closing balance I want it to be for 30th of June 2019. So this is reflecting on my statement of financial position. I will also show you how this Forex realized gain happens. So on 1st of October, I've put in this 100,000 Japanese yen into this bank account. The cost, I would say, is 1,300 Australian dollars. And then a month later, I've taken $50,000 out, 50,000 Japanese yen out. And then the actual cash equivalent to this particular Japanese yen is $621.35. So I would actually, there's a difference between this 50,000 here. So the half of this is 650. So there's a difference here. So I will show you on the statement of financial position. Sorry, back to the statement of financial position. If we click on this article button, it will give you the detailed transactions of what happened to this particular foreign bank account. So in, I have 1,300 Australian dollars, and out is the half of my foreign currency. So the cost is 650. So the difference will be taken up on the operating statement as a Forex realized loss. Unfortunately, in this case, it's a loss. It's $28.65, treated as a Forex realized loss. So this is all for accounting purpose. What about tax? So if we go into reports and then click on run report and select this report, foreign tax election. This is my other account. And if I'm looking at my Japanese account, oh, because I originally chose 200K balance election, so no tax is actually calculated because it got exempted. So going back to our slide. All right, so a lot of the times that we have clients asking us why there's a huge realized gain or loss that's been taken up. We don't really have that many cash out transactions during the year. How is this calculated? So most of the time we realize it's because there's a swap between, switch between different methods. According to the ATO, if you do switching between methods, then the unrealized gain or losses have to be realized once this is done. So it's sometimes unrealistic to actually double check what's been selected in the past, or if there's a change of accountant, then you kind of lost the records of this. So what I do recommend is actually include this foreign tax election report in one of your work papers so that you can see what has been selected in the past financial year, so that in this financial year, if there is any realized gain or losses that's over your expectation, then at least you know where to troubleshoot this issue. So another poll question, in a given financial year, how many times do you actually encounter a situation when the bank account goes negative? So I'm just gonna launch this poll question. There we go. All right. If there is maybe less than 5 times, or maybe there is 5 to 10 times, or more than 10 times, or maybe it's not relevant to you because you don't really have many foreign bank accounts. So this particular question is actually designed by our product manager Ahmad, and I will pass the results to him so that you have a look. We'll just give a little bit time for us to finish this poll question. Cool. We're still going a little bit. All right. Thank you, guys. Oh, thank you. I'm just gonna end this so we can continue with this. So end of this request, this poll request, we actually have, well, 60% of the time we have probably less than five times that goes negative. We do have 15% of the time that we have more than 5 to 10 times. 8% it goes more than 10 times. That would be really bad, of course, and 18% is not really applicable at this moment. Okay, so let's go into the next slide. Surprise me. So this particular slide, we're talking about the overdraft of a bank account. Overdraft or say negative. Sometimes if the bank account goes negative, the issue is you can't really run peer updates. Well, the actual design for class to actually treating foreign bank account is like treating an investment. The actual currency, the foreign currency, is the actual unit of these investments. The exchange rate normally is the price, and then you've got the Australian dollars as the the book cost. So the way class doing parcel matching and stuff, so kind of restricted you having to oversell something that's you haven't hold it yet. So because of this, so if the bank account actually goes negative, when you run peer update, we can't really find the original cash in transaction, the buy transaction. So that's the reason why it stopped you from running the peer updates. We do have workarounds. So this is a knowledge base article we've given to our customers. We do have actually 2 ways to deal with this. One way is not is another way auditors don't really like, which is change the date of the cash transaction in order to avoid a negative balance. The other way option is actually given by one of our customers. We find it really good. So actually use a custom holding account to hold this particular cash out transaction until you have the foreign bank account goes 0 or positive, like have more cash in transaction to take on this cash out transactions. And then, so, you know, using this way so that you can continue process your period updates and, you know, and finalize accounts. But my understanding, it will be really good if we do actually allow these foreign bank accounts to go negative. Okay, coming up to the second topic. So this is about foreign listed securities. We have existing share markets. How many existing share markets we have at the moment? We have 21 foreign markets that's supported. Sure, we have more. We actually just had another 2 added during last April release. So it's good that we support more. The more, the better. So what if, you know, sometimes you find the market is not there and it's not really supported yet, then you need to actually manually add these particular investments on the business level. This is just like when you actually have to add a private company or unlisted trust and stuff. So what you need to do, so coming into class, what you need to do is go into investments and then click on new securities. So this is on at the business level, and then entering the information you needed from here. So these particular investments can be used by your practice. However, you need to make sure that you maintain, you know, the price and also the income manually in this case. So if you can send us, if you do have another market, just make sure that you send us support request to the fees team so they can see how much, how many clients actually request for that particular market. The other thing is why we have to choose the correct market and why it is important. What we find out is a lot of the times that we have clients sending us requests and say, I've got this price on this third-party website and it's so different from what's showing in class. What happened? And most of the time when we go in and find out that the actual market in class was selected incorrectly, because in class, if we do go into browse holding accounts, and if we select, for example, if I search for Apple and then select my foreign markets, you see how many like Apple are supported in different markets. So a situation like this, if you select incorrect market, if the currency is incorrect, then you probably will end up with a different price. And then this is actually causing problems for you, for your members' balances. So what you can do, if you do find out that in the system, you have these particular investments that's been created under the incorrect market, what you can do is actually go into the fund, and then you can go into investments, browse holding accounts, click on this particular security, and then change it accordingly. So change it to the correct market. So yeah, again, make sure that you do make sure we have these particular investments in class, and then so that we can going up to the next slide, which is buy and sell. So I'm sorry. So with buy and sell, there are actually 2 dates on that particular event. I'm just gonna demo how, I'll show you how they are different. I'll show you a listed security acquisition event. So if we go into transactions, go into investment buy, and then go into listed security acquisition, for example, we're gonna buy something. And then I'm putting in probably last year, May, around this time. So I put in my trade date, and also there is a settlement date. So I say this particular investment settles after 4 days. And once I put in the settlement date, you notice that the exchange rates pops up. So the exchange rates actually determines, the settlement date actually determines the exchange rates that's going to be used for this particular business event. However, the trade date, as we know that most of the trade dates is when we deal with cash, either for a cash out transaction for acquisition or a cash out like a payable or a receivable for a security disposal event. Well, these 2 days generally will have a different exchange rate. If this is a situation, how do I actually, take up the difference and stuff? So pretend. So in this particular situation, this is again the Forex realized gain and loss. So if we go into transactions, so to take up the difference, if the difference is an income, then we take up as fund income and then make sure that you select foreign income. So this, you can choose either a non-taxable foreign income or a taxable foreign income, depending, I will discuss that a bit later. And then transactions, if it is a short of the expense, you choose, just fund expense and then taking up the foreign expense, either deductible or non-deductible. What tax, for accounting, for sure, you need to take up this particular income or loss, income or expense. But however, for tax purpose, generally for tax, it will be taxable according to Division 775. However, if there will be sometimes an exemption to it, this actually determines the scenario of this particular, so what happens to this particular acquisition or disposal. You need to refer to a little bit to the ATO website for a little bit more information. So I've put the ATO website's link for you to have a further rate later when you come across situations as such. With buy and sell events, we also, after buy and sell, sometimes we have dividends like incomes that's already built in class, and then it's save us your time and energy. Oh, what happened? Internet. Okay. Another issue, I will demo this generate income together with this fit to cash tax feature later. So I'll just go through this particular knowledge-based article. So 15% tax withheld issue. This is another commonly asked questions that we, from time to time, that you notice that your actual cash received is less than the actual dividend that's generated from the system. And after investigating, you find out that there's extra 15% that's being withheld. So this is normally because this is normally to do with the American markets, that this particular form, the W8 band form, hasn't been filled in. And if you have filled in this form, and then if you haven't filled in this form, then the American government will charge a little bit more than usual. So filling this form, so you get the double tax agreements from the other market, from the American market. So the fund can actually claim the 15% of tax. So now I'm gonna demo the generate income feature and also the fit to tax feature. So in this case, I'm gonna use this CYBG as an example. So going to transactions, match transaction screen. If I click on generate income, in this case, I'm just going to use this as an example and then create this income. So while you can see that the actual income, actual event itself is showing 475, and I've got this much as my foreign tax credits. So this is the total dividend income is $559. So what I do here is if I do just tick these two events, pretend I'm going to match it, and then you see that there's a difference with $83, which is exactly another 15% of the tax that's been held. So which means that for this particular investment, I got hold 30% of the foreign tax. So what I do is if I do click on fit to tax, show you what happened to that business event. So you can see the total of the dividend income is still $559, but my foreign tax credits has been doubled, which has been taken up this extra $83 as my foreign tax credits. So this makes sure that my foreign tax credits flow correctly into the tax return. So these properties, coming up with properties, we do have clients checking whether, we receive valuations from a foreign properties. Unfortunately, no. In this case, we don't really have a data feed provider to give us this particular information. So make sure it's just like updating a property valuation. You make sure that you update this valuation 3 yearly or yearly, depending on your client's requirements. So there's no special treatments. And also once you put in the address into the property account, you will always have this verification status as unverified, because this won't really be verified by the API data business. So they won't really verify this address. So unfortunately, you just need to manually process a foreign properties. Also rental income, make sure that you apply the exchange rates either based on the class exchange rates or from, if you do have a foreign bank account that's shows the equivalent Australian dollars, make sure that you update this manually. So next, come up to our corporate actions. So unfortunately, in this case, this is not really to demo you how to actually process the foreign corporate actions, because most of the corporate actions, we have a corporate action team that's run by Kevin Zhang, our compliance manager. So he will collecting information as needed and to implement the corporate action council. But if you do find a corporate action which is missing, don't hesitate, just raise out the support request so we can implement this for you. Below, so these 4 are the documents we probably need from you if you have this information on hand. So if you do have a class ruling from the ATO, or maybe some tax treatment information from other practice, or if you have the share registry or the clients to confirm the corporate actions detail, or maybe you have the website handy to explain what's the tax treatments for it, or maybe even better, if you have the CCH CET reporter that you can send through, so we can implement this information for you. So last but not the least, we were talking about the foreign tax credits. Whoops. So calculating foreign tax credits, I've put the ATO website in here, so you can have a look later if you would love to. The ATO actually give us the 3 steps to calculate it. We from class kind of simplify the process, and also taking the situation when you have pension exemptions into consideration. So this knowledge base actually listed the legislation and also some additional information for you to check. So the foreign income tax offset limits calculation is, the steps are listed from here, but I will show you in the demo. So back to this fund, as we have already run the peer updates, so this foreign income tax offsets has been calculated correctly. So the way I do the calculation, this fund is 100% in accumulation mode. So I'm not going to take into any the actual percentage into consideration. So the total of my foreign income in this year is 10559.35. Luckily, so this is the screen. This is the calculator. Luckily, self-managed super funds only using 15% of tax. So the actual tax that has to be paid for this particular foreign income is $1,583.90. So now if we're going back to the fund, so what we can see is back to the statement of financial position under the income tax payable account, you see that my total foreign tax credits that I've already paid for this financial year is 10167.8. So this is the foreign tax credits. So because of the because I can't really, there's a threshold by the ATO website. I can't claim all of these $1,167 in my tax return, because the foreign tax credits is not a actual credits like a franking credits. It's just the offset to reduce my tax payable, and then ATO just kind of set a threshold on it. So the only amount I can claim back is that 1,500 that we just calculated. So in this case, taken away, so we will have this excess foreign tax credits write-off showing up here. So sometimes clients do come and ask us what this is. This is purely just readjusting your threshold for your foreign tax credits that can be taken up by the tax return. So if you still would like to claim it, what you need to do. So it's not, I have put in the notice user guides up to here. So what you can actually do is just under the peer update, we do have a particular field called post-fund income tax expense. So what you can do is just update the provision for income tax for this field, in this field to reduce the income tax, because you're going to claim more tax offsets. So in this case, you making the extra tax offsets included in your tax return, and also make sure that you do update your tax return accordingly. So I do have another poll question with you guys. So this is again for our product manager, Ahmad, and we would love you to help us to do this one. So would you like to show the total foreign income, including the foreign tax credits on the operating statement? Thank you, guys. Just checking whether you're still there. Okay, cool. Oh, thank you. Still going. Okay, cool. Thank you, guys. I'm just going to share the results. Thank you for this. So we actually have 75% saying yes, please, and then probably 25% showing as no, not really. I will pass this to our product manager. So what actually happened here is we do have clients come and ask whether we can, exclude these foreign tax credits from our operating statement. The current process is it does include everything. For people that probably wants to exclude it is part of, because that foreign tax credits. Oh, sorry, I do see. So because foreign tax credits itself is it's not really refundable. It's not like franking credits. It will for sure be refundable. So that's the reason some clients doesn't really like it to be shown on the operating statements. They prefer to show the net foreign income. However, if we can actually build a feature, just say have a parameter either at the fund level or at the business level, just say I can choose to be yes or no, then it will be more in compliance with your business decisions. I only have 2 slides to go. Just bear with me a second. This one is in relation to the foreign tax credits, on NTAP. A lot of times that I see NTAP on the annual statements from a managed funds or from a listed trust. So what is NTAP? So so non-taxable Australian properties, I would only I can think that this is anything that doesn't fall into the categories as a taxable Australian properties. So I put the definition and criteria for taxable Australian properties into this. We're not going to go into it too deep. It's normally showing on your annual tax statement, so that you just need to make sure that you enter this information into class. But how do we enter them into class? I'm going to show you how to do it. So if we go into transactions and go into fund income, when we have to entering a fund annual tax statement, we go into distribution tax statement, and under the capital gain section, we do have these different, for capital gain, do have these different methods showing up here. So you select this foreign, so this is designed for this NTAP to be put in. Back to the slides, what we discovered is since 2017 or 2017, we realized that Platinum do have a lot of tax statements sending out like this. So it was saying that there will be tax paid or offset just on the capital gain and TAP. And then because class in the distribution tax statement event, it doesn't really have an extra field under the capital gain to put in the tax offset. So we come up with these two workarounds for you to take these credits up. So one is to either include it in the foreign income, but reducing the capital gain, and the other one is generally just keep the capital gain and also reducing the actual total foreign income. So that's end of the foreign tax credits, and then we're coming up to the other kind of foreign tax, which is the foreign withholding tax. What I've noticed as well is that on the distribution tax statement, client likes to put in this foreign withholding tax into just the distribution tax statement event, but didn't really put into the corresponding distribution business, the cash or reinvestment business events. But because this distribution tax statement event is only a balancing item, it doesn't really populate this information into the tax return. So just make sure that you do actually entering the foreign withholding tax into the actual distribution events, so that it boosts up your gross distribution, and you still keep the actual cash received as the net distribution after applying this foreign withholding tax. So this kind of coming to the end of my presentation. If anyone has any questions, can you please make sure that you actually entered into the Q&A session? And Therese, Therese from our, hi Therese, from our implementation consulting team would love to actually discuss this.
Hi guys, so I'm gonna go through two commonly asked questions that we received with foreign investments. So one of them is, how do we take up rental statements for a foreign property? So basically you'll need to first translate the amounts from the rental summary into the AUD amount in a spreadsheet. So unfortunately that's you're going to need to do it in a spreadsheet, not directly in class. And you have a few options to translate those amounts. You could use the ATO average yearly rates, or the average RBA rate. So after you've translated those amounts in a spreadsheet, you'll take up a business event, the rental statement business event, to take up that income. And then another question we receive quite a bit is, and it's quite simple, does class allow you to match off cash transfers from a foreign account to an AUD account? So class does allow you to do this quite simply through the match transaction screen. And if there's any Forex gains or losses, the system can automatically account for these once you, of course, do a period update. So yeah, I think I'll pass you back on to Julia, and I'll answer a few more questions I've received in the Q&A box.
Thank you, Therese. So now I will just conclude this webinar. As I mentioned earlier, there will be a short survey at the conclusion of this webinar. So if you could answer this survey, and we would greatly appreciate any feedbacks from you regarding this presentation, regarding my presentation, and also the content. Once again, thank you so much for your time for today, and have a good afternoon.